Hello, everyone. This is Tom Fox back for our continuing series sponsored by K2 Integrity on business and financial fraud yesterday, today, and tomorrow. Today, I have back Joanne Taylor. Joe, first of all, welcome, and thank you so much for taking the time to visit with me again.
Thanks, Tom. It's great to be here today.
Joe, in a couple of previous episodes, we identified the issues around fraud in this era of coronavirus and moving forward. And in our last episode, I visited with your colleague, Ray Dukey, around how to prevent fraud. But I wanted to maybe visit with you today about how to detect fraud, because every compliance program, whether it's fraud prevention, whether it's AML, whether it's export control, whether it's anti-bribery, anti-corruption, has three prongs: prevent, detect, and then remediate. And the detect prong can be as strong a part as the other two. So I thought, or at least wanted to see if maybe you and I could visit a little bit about your thoughts around that detect prong, and maybe start out with what are some controls you might suggest?
Well, it's a great discussion topic. I think that what I'd say here, headline wise, is I think there are some really good tried and tested methods for detecting fraud. And the number one contender is whistleblowing. Because we know from research done and surveys done by the ACFE that whistleblowing tips are the most common way to discover a fraud. And in a survey they did recently, more than 40% of survey participants' cases came from a whistleblowing tip. And that's nearly 3 times as many cases as the next most common detection method. So I think it's really important for firms to look at their whistleblowing program, try to make sure it's as robust as possible. And a crucial aspect I'd highlight there is actually having a whistleblower hotline in place, because we know that that helps firms detect fraud more quickly and minimize losses more effectively than those who don't have a whistleblowing hotline.
Joe, you referenced the ACFE report, and they, of course, put out the report to the nations. They also had a December supplement this year, or at least another report. And they've consistently talked about whistleblowers as a key detect control. Has that really been your experience as well?
Yeah, absolutely. I guess from a whistleblowing program perspective, you obviously look at across a range of topics, but fraud, bribery, and corruption definitely come up as key themes that we see repeated when whistleblowers do put their hand up.
Joe, let me visit with you a little bit about having a phone line, and if I could expand that maybe to having a working phone line, because there's an apocryphal story in the FCPA world, which, whether it's true or not, it's the great story, which is along the lines of the following: a company is in their final meeting with the Department of Justice to settle their FCPA enforcement action. The DOJ prosecutor, who in the story is always a woman, so the woman excuses herself, goes to her office, and calls the company hotline to reach a non-working phone number. The point of the story in the FCPA world is make sure your hotline works. So make sure your whistleblowing line works. Have you had the occasion to help companies test that, whether it be as simple as calling in or actually, running a test through to see if the process works throughout the company?
Absolutely. And I think you're absolutely right there, Tom. For any firm facing any form of regulatory scrutiny, I think it's a real no-brainer for someone in the regulator's shoes to think to test the line. Indeed, there's different channels that firms have, right? So some firms have a hotline with a phone number. Some firms have an electronic platform. Some firms have an email address. And it's important to test all those channels, because you could have a situation where an email address is managed by one person and that person leaves the bank or the institution, for example, and therefore any notifications go into a void, essentially. And we've had in the UK a recent case in the last year or so where a major insurance company forgot to test its line. And for a period of several months, nobody at that insurance company could make an anonymous report. And that ability to make an anonymous report is a requirement under the Financial Conduct Authority regulation. And so that firm really landed itself in hot water when a simple kind of built-in periodic test could have identified that issue very quickly.
Jill, let me turn the focus just a little bit. And if I could, I've now had the opportunity to visit with you over a couple of different podcast series. And one of the key themes that I think I've heard from you is that detection of fraud is not a one-time event. It's not a snapshot. It's an ongoing process. And so I really wanted to see, one, is that a fair assessment of some of the things you told me over our podcast series? But how does a company implement that in terms of a fraud health check? And how do you really have that ongoing or much more macro view?
Yeah, absolutely. I think it's a really important aspect to consider when you're looking holistically at your fraud program. And I think it would be a mistake and a bit kind of naive, really, for firms to rely on, for example, an internal or external audit in order to detect fraud. Obviously, we know that can happen through an audit, but audits are focused on particular methodologies and ways of looking at the control environment. And they're not necessarily geared as such to detect, for example, an ongoing fraud that's happening right now. And that's where the health check comes in. And really, in a nutshell, it's the combination of data analytics to the organization's data sets and an investigative mindset and approach to run the data against fraud scenarios that apply to that organization. And the applicability is very important as a methodology. And then when you get those red flags, to do some digging to work out, is this a false alert, or actually is there something here? Is there a kickback scenario going on with this vendor, for example? And what can we do to really drill down into that to see if that's something the organization needs to really get a handle on and really have a proper look into?
One of the things I think compliance officers either don't understand about fraud, or at least have trouble getting their arms around, is fraud is not simply stealing money. Fraud can be a wide variety of actions. It can be lying to government regulators. It can be certainly taking money. It can be taking money from vendors. It can be taking kickbacks. It can be stealing equipment. And how does a company think through really all the variations of fraud? Is it just too large? Or how does a compliance professional who really is focused on controls begin to think through a problem like fraud?
That's such a great question. And I think for companies that have kind of diverse business activities, it can become very tricky, and it can get a bit out of control, like you say, if you spend a lot of time thinking about every single potential nuance. But I would say that there's a way that you can take a pragmatic approach that involves really looking at the key types of fraud that could happen at any organization. For example, you could have payroll fraud with ghost employees, that kind of thing. And then sort of combining that basic starting point with frauds that are known to have happened in your industry in the last 2, 3, 4, 5 years, so that you're making sure that you take on board what's happening in real life, as well as kind of the theoretical schemes. And also making sure you know what's happening in your own organization, which for a big organization can actually be a challenge due to, where does the kind of corporate history, corporate memory lie? But I think if you can sort of combine those essentially sort of 3 elements, you've got a really good starting point for a series of kind of what I would call fraud scenarios that can really help inform your risk assessment and the way you look at your control environment.
Joe, I've attended a couple of ACFE national conferences back when we used to have such things. And one of the things that struck me about, if I can use the phrase ACFE old timer, perhaps someone closer to our age, is that they tended to be ex-law enforcement types. You saw some CPA types, but you really had sort of blue collar, in the trenches investigators or rather determining fraud. And in 2020 or 2021, fraud investigative techniques have really changed and moved into a modern era. You mentioned data analytics. Do both of those styles and strategies of fraud detection, are they still valid in 2021, or is it something else?
Oh, it's another really interesting question. I guess I'm I've not really thought about it, but what springs to mind immediately is that we've got to make sure that there's some alignment and cooperation between a fraud team and a CISO team, a cyber security incident management team, to counter exactly what you've just flagged around the sort of crossover between the classic and continuing fraud scenarios that we've just covered that do stick around and just basically are tweaked according to what's in fashion, COVID-19 right now, but there'll be something else in the future. But what we do certainly see is obviously the vector, the way that these frauds are perpetrated are through cyber and technology. And so it's really important that there aren't any silos between that kind of fraud team and a CISO team. And I mean that both in regard to dealing with a fraud incident and like fraud response, where there might need to be actions taken by both teams. And also when you're looking through perhaps a risk assessment or a more general review, when you're looking at your fraud control environment.
Joe, if recognizing the myriad types of fraud we've touched on is just a drop in a pond or drop in a lake of potential frauds, are there two or three red flags that you are talking to your clients right now about, whether it be COVID related, payroll related, or cybersecurity related, that you could tell us about?
I think the one that kind of, I'm talking with a client right now about doing a kind of training to their own client base. And I suppose the one that comes up repeatedly, and maybe it's not so fashionable or trendy, but we see it repeatedly, is business email compromise fraud. And that's where, obviously you have a situation where somebody, the fraudster, is posing as either a vendor to the organization, to the organization, or perhaps the CFO, or CEO. And we see, companies repeatedly having problems, falling for that. And that's why training of the treasury team, and making sure that staff are trained on malware and phishing attempts is so kind of crucial as a continuing part of your fraud program.
Well, Joe, unfortunately, we are near the end of our time for this episode, but I hope our listeners will join us in our next episode, which will be our final episode, where we look about, or rather, I have Ray Doohickey back with me on responding to fraud once uncovered. Joe, I greatly look forward to continuing the conversation with you, and thank you so much for visiting with me on this podcast series.
Thanks, Tom. Great. Thank you.